What's up, guys? So today I'm going to break down how I made about $350 in my funded account in about 30 minutes. But one thing I wanted to point out is there are specific reasons why those trades made sense to me. And I want to kind of talk about how certain strategies just won't work for other people. So by the end of this video, I'll break down the two trades. But first, I just want to show you how to actually find your edge by understanding yourself. So a lot of the time, if not most of the time, traders, they come up with their strategies by going on social media. They'll copy something that they see on a YouTube video or on a TikTok, a reel, whatever the case may be, and they'll take that, they'll back test it. Then of course they have all this data of how profitable a strategy can be, and but what they don't take into account is the forward testing, right? Which is live trading. And live trading, the way I like to think about it, is kind of like taking a personality test, right? Over time, it reveals what actually works for you, like what works for your temperament, what works for your lifestyle. And so if you try to trade against that nature, you're never going to find consistency. So the first question you want to ask yourself is around timing, right? Number one, how much time can I dedicate to looking at the charts every day and trading? And at what time specifically? And this is where, you need to be honest with yourself, right? Because if you work the night shift, for example, and you sleep during the day, you can't trade the New York Open. For example, if you're on the East Coast, right, which is a 9:30 a.m. open. Maybe what works for you is when you wake up in the afternoon, you kind of check the PM session, which, if you're trading futures, there's a maintenance window at 5. So from 5 to 6, there's no trading. But maybe before you go back into work, you're trading the Asian session, right? And so Tokyo opens at about 8 p.m. Eastern, runs till about 2 o'clock in the morning. Maybe you find that the window of time and the amount of time that you can commit to trading is about 2.5 hours before you go into work, right? From 8 p.m. to around 10:30. And now, again, I'm making up numbers here. The point is, figure out what works for your schedule and have a slot of time that you consistently take every day for your personal trading. And that amount of time is also up to you. I know for me personally, with my strategy, I don't like to be stalking the market all day. I don't like to wait days or weeks for the perfect setup. I'm more of an intraday scalper at the New York Open, and I live on the East Coast, so it's a lot easier to quickly check the market at 9:30 in the morning. I'm already up. I'm already, sitting at my computer, and I like to be in and out, right? That's why I said at the beginning of the video, I made about $350 this morning in less than a half hour, and that's a perfect scenario for me. 2 separate trades. I'm off the charts before 11 o'clock, maybe before 10:30. I can't remember what it was. And that's what works for my temperament. Now, speaking of temperament, there's a lot of different things that go into the personality of a trader and the types of strategies that people might lean towards or how risk averse they may or may not be. But I just want to break it down into 4 quadrants, right? An easy way to look at how to find what your temperament is and the types of strategies that you're probably going to want to lean more towards. All right, so we've got 4 boxes here, right? A quick way to kind of figure out what your temperament is as a trader, right? So number 1, the first element is going to be control. And we're not just talking about your own emotional control. We're talking about a controlled environment in the market itself, right? So we're talking not market open when it's high volatility. We're talking avoiding news events, that sort of thing, because you don't like to see spikes in price and fast movement. Are you more of a control-oriented trader, or do you thrive in the chaos, right? This doesn't necessarily mean that you are chaotic as a trader, but it means that regardless of market conditions, you'll thrive. In fact, you almost look for faster moving price, and you definitely don't shy away from trading news events. And then on the other side, we have methodical and intuitive. And so, kind of self explanatory, but methodical is just about taking a rules based approach. And you need to see all of your check boxes checked before you get into a trade, versus intuitive, where you kind of feel the market out. You have a looser framework that you follow, but it's not necessarily exact rules every single time. And so what we'll notice is this kind of gives us four different basic categories that most traders will fall into. And so what I like to call someone that's methodical and controlled, or specifically is looking for controlled environments in the market, is someone looking for a rule-based precision. They have a systematic edge, right? So you have your checklist, and you don't like to see high levels of volatility, right? So you'll trade maybe the PM session for New York, or maybe you'll trade Tokyo. So the the overnight session for or the nighttime session for those of us on the East Coast, or in the U.S. Maybe you like to see a more controlled, slower moving price. You can check all your boxes and take trades that way. Now, the drawback of being an engineer is rigidity. So that means you may suffer from analysis paralysis, right? Where you say, I need to see this. That you might have 10 check boxes you need to see before you get into a trade. And if market conditions change, you have a tough time of adapting. And so what's interesting about that is that there's going to be positives and negatives about all of these personalities. It's just about understanding where you fall and what you might need to work on. So what's interesting is on the other side, you have what I like to call the scientist, which is this is someone who's methodical, but they thrive in a little bit of chaos, right? They are experimental, they're adaptive, they're exploratory. They don't necessarily stick to just one thing on the chart. What they're looking for is essentially they're experimenting, right? They're saying, hey, I've noticed when this happens, this tends to happen. Or if this happens, this tends to happen. Maybe I've heard of traders coming up where they love FOMC, right? Or they love CPI week. They love high impact news events because they're going to get a lot of movement, right? Now, obviously, the drawback to that is a little bit of a lack of commitment to one strategy, right? You might have success in testing a lot of these different things, but you're not really going to have tons of data around any one specific thing. Now, on the bottom, if someone is intuitive, but they like a controlled environment, right? This means that they have discretionary control, flexible judgment. This one is a little tougher to understand, but if you think about it this way, this is someone who they have a general rule set that they kind of follow, but they don't necessarily have a checklist on what constitutes a break, what constitutes a retest. Are they looking for a point of interest that price needs to pull back into before they take that next trade? They just kind of have a general intuitive sense of the flow of the market, but they like a controlled environment, right? They like to see slow moving price or normal market conditions. That way they can kind of ebb and flow with the normal waves of the market. Now, again, one of the drawbacks tends to be inconsistency, because when you have a loose approach, you're not even really sure what you're doing. You have an idea of what you're doing, but you're not really sure what it is. And so that may be tough down the line if you try to adjust what you're doing. If you try to update your edge, you're kind of unsure of what it is you're updating, right? And then last one, as you can imagine, the intuitive that loves chaos is like a maverick, right? They're a gut trader. They thrive on volatility. right? They come into the market, and once they see fast moving price, they kind of just hop on the wave. They just kind of go with the flow. They don't mind the higher level of risk, essentially. Now, of course, the drawback is emotional volatility, and that means you're going to have some big wins. That means you're going to have some crazy losses. You might trade on tilt more often. And to be clear, I've seen examples of each of these four and profitable traders in each of these four. The issue is if you don't understand the type of temperament that you have as a trader, then you're not going to know what to work on when things kind of don't go according to plan. Now, I'm sure as I was going through that, a lot of you are kind of picturing yourself in one of the four quadrants, right? I'm sure there's a million different other variables that we could add into this, but in a general sense, that's kind of what I've seen. Traders tend to fall into one of these four categories. And the thing is, it actually takes a little bit of time for you to actually figure out where you are on this quadrant. It takes time and journaling, and actually, I have my journal here. Like, I have multiple journals that I keep throughout the trading day, and the reason why is because if I don't know what I'm doing, I don't know what I'm doing. I know that sounds crazy, but it's like if you don't know how you've actually been acting in the market, and that's why forward testing is so important. You need to have a record of what it is you're feeling, what it is you're even doing from day to day. That way you can adjust based on real data and journal entries rather than just a feeling. And I have a free PDF down below, by the way, where you can download the exact template that I use to journal every day. Or if you'd prefer to use a physical journal, I actually like using physical journals. I made this one with the custom pages. That way you don't have to guess about what to write down. This really helps to keep your emotional stats. The link will be in the description. All right, so let me break down these trades then. I know you've probably been waiting for that. And if you skipped to this part, by the way, you need to go back. You missed a lot of key information. So the way that I trade, I used volume profile to kind of find areas of interest, high volume, where I would like to essentially scalp intraday. Now, I have the volume profile drawn from, this is going to be, actually, let me turn on trading sessions so you can see. This is drawn from the New York session, all right, 9:30 to 4 p.m. Eastern. And then I have another volume profile drawn from the 6 p.m. open after the maintenance window all the way through overnight, which is going to include Tokyo and the London session. But I'll stop it right at 9:29, right before the New York Open, because that's when I'll then draw a developing profile and click extend right, so that it updates throughout the day and I can see value areas here. If you want me to do a separate video on a full breakdown of this, I can definitely do that. But essentially, what I was looking for is a confluence of multiple value areas, right? So we have the value area low from overnight here. We have a high volume node kind of poking out right here. Let's do a different color for that. And as price kind of pulls away from this area at the 9:30 open, we have a couple levels of implied liquidity. And the reason why I call them implied liquidity and not just actual liquidity, I can get into it a little bit more in another video. Well, let's erase that. But you actually don't know if there's liquidity there or not. We assume that at swing points there's liquidity, but unless we have the order book, we won't know for sure. So anyways, as price pulls away from here, of course, I have this developing profile. Let me turn off the session here. I have this developing profile updating throughout the day. And as it comes back, I notice not only is it in premium of the current session range, we're pulling back up into this overnight high volume node at a few levels of implied liquidity, and the overnight value area low. So that's, 3 or 4, however you want to look at it, different confluence points. And I placed my entry kind of in the middle of all of this. And as you can see, I kind of got a little bit lucky here with my stop placement, placing it beyond this last level of implied liquidity. And then I took the trade down. I like to target at least 1.5 R. And so that one, let's see how long it lasted when I got tagged in right there. That was, about 24 minutes. And then a couple minutes later, remember, this will be updating throughout the session. So you'll see the point of control and the value areas shift as time goes on. I like to usually wait about a half hour before I make any decisions based on this profile, just so that volume can build up. But here we go. As I get out of this cell and come back into here, we notice the value area low of the current profile shifts up. So in this trade exit, right, I notice that we're approaching the new value area low of this developing profile. And we have a slight high volume node right in there. I mean, kind of both of these. Now, the volume here isn't significant, but what is significant is that there's a drop off right below, and then you have more volume here. And so what I like to do usually is target these value area highs and lows for entries and then get out near the point of control. And so I placed an order right here, just targeting, again, at least a 1.5 R, targeting towards the point of control. And obviously it took, let's see, 8 minutes to do that. So about 20 minutes on the first one, 8 minutes on the next one. I'm in and out with about $350 on my funded account in about a half hour, and then I'm done for the day. Because I know, for me personally, the longer I stare at a chart, the more I'll come up with reasons why a trade might not work, or reasons why I need to reconsider, or even more trades that I need to take and end up trading on tilt. And by the way, this is a funded next 25K futures account that I'm using. They guarantee payouts within 24 hours, or else they owe you $1,000 on top of that, right? So it's been pretty great so far. And so in case anyone is curious, there's going to be a link in the description as well if you want to sign up for a funded next challenge, futures or CFDs. So if you're trying to figure out what your trading personality is, your temperament, like I said, I'm dropping a free link to the PDF template of the exact framework I used, journaling in order to get profitable, and or of course, if you want the physical copy, link is in the description as well. But I'm curious, let me know what kind of traders are watching this right now. What are some weaknesses? What are some strengths? What are some of the things that I missed? I'm sure I've missed a lot of different elements in there, but even if you don't download the template or buy the journal, keep in mind intuitive trading versus methodical trading, control-oriented trading versus chaos-oriented trading. And the next time you hop in the market, ask yourself, which one am I? We'll see you next time.